who is sitting in the back here. I cover north of I-94 for Minnesota. A little bit about me is I was originally a sales agronomist for 2 years in southern Minnesota, kind of in the green area. You moved, what, 8 tankers last week, I believe? So, yeah, I've got a couple studies going up into Rose specifically. This is going to be a Poly 4 product. This one's still kind of in the making. It's essentially looking at a K-Mag replacement or a competition with Nutrien's K-Mag product. You're getting your magnesium, calcium, sulfur, a little bit of potassium. So again, that one's kind of on its way out. We'll be the sole providers of that one. We are working on opening up a mine with Anglo American. Then here we have another biological. I'm sure you guys are familiar with those. Everybody's coming out with one. This one is more of a root growth promoter than it is going to be a nitrogen fixing bacteria. It's 4 bacillus acids or bacillus bacteria that are going to help with the root elongation and root mass. I've done some studies on that over in Albany and then Piers, Minnesota. Root mass was significantly better. This last year there wasn't much rain to feed those roots, so it did have one of the, I think it was actually the only result for ADM where it was negative this year. So lucky me. But other than that, they have an 86% win rate, and when I say win rate, that means they made enough money back to pay for the product and gain. And this is where Paul's going to take over on his particular product. That's going to be what he's going to talk about for humic acids. So he's also got a little demonstration.
Yep, just make you some tea. Kyle, why don't you pass that UV there?
Yeah. You guys can take a look at this, shake it up. Don't drink it, but it does smell kind of like the frosting on like a 3-day-old donut. So you can smell it if you want, but I would not drink it. There's only one bathroom. So I don't know what it does, so.
Perfect. Suppose I need this, huh?
Yep.
Well, good morning, everybody. My name is Paul Detloff, and I work with the HGS Bioscience. So I work with a company that specializes in humic and fulvic acid products. We specialize in that on the dry side. So some of my former life has been involved around the nutrient side of things, DuPont, some of the different areas and some different co-ops and things. And I'm pretty excited about this product because we've actually got a product that we can put in with your dry fertilizer. We've got a product that we can put in with different liquids, the NeoVita product and some of those. So I'm just going to touch real quick. I appreciate you inviting me in here today. But Kyle was talking about the NeoVita product being a nice, clean product, or being very soluble and able to work with. So anybody in here have any experience with humics? Okay. A lot of times when you use a humic or you use some on the liquid side especially, we can get some issues with that, right? I mean, we can have some issues with some plugging, have some settling out, some parts in there. Might look like your college roommate's spittoon, right, in the bottle there. So you might have some chunks floating around in there. I'm going to pass this around. This is one of our prills mixed in with the NeoVita product, so you're able to do some of that and look at this this process here with their product as well, so you can get some humic and fulvic in there. But what makes it different with our product, we talk about our unlock, increase, reduce, and unleash, and how that works is a process that we do with our humics is actually we do a extraction reaction process with the Leonardite. So if you've ever, I need to put this on here, so sorry, bear with me. Obviously not a very good preacher in church here. So looking at this process, if any of you have used Leonardites, it's probably been in a form like this. I'll pass it around. It's hard to see with the lights off, but it's basically the layer. It's the layer right before coal and oil. So it's organic matter, carbon matter, animal decomposed animal, organic matter, things like that. What they do in the raw Leonardite side is we take it, they crush it up real fine, so that the more surface area is there, more water can get to it. It can break it down in the soil. The problem with that is it got to this point because it doesn't break down that well on its own. If it hasn't broke down yet in the millions of years it's been there decomposing, it's going to be a little bit tougher to break down. So if I put that in my soil solution, I'm just going to let it sit there, okay, while I pass this around. It's going to look like, again, it's going to look like it's something that's just like I said, like a college dorm room, whatever it may be. There's going to be stuff floating in there. I'm going to let that sit for a little bit. So what we do is with potassium hydroxide, we actually take and react that Leonardite, react that organic material, get it to break down, turn it into a liquid form. In that liquid form, then we actually dehydrate it off, spray dry it, take the water off, and becomes a more pure form of humic, fulvic, and then some potassium on it. This piece I'll pass around is our powder solution, and this is actually what started the company back in 2010. So we figured out with the international market is where it actually started, that what's the number one or most expensive thing that we ship in the industry? Water, right? Take totes, take them, ship them around. That's a lot of stuff. So instead of shipping 4,000 gallons worth of liquid material, we were able to ship 40,000 pounds of a powder material to the international market. They were able to react it with water and become liquid humic over in Brazil, Australia, 40 different countries, and able to make their humics out of that. So you'll look at this product, and this would be our powder form. You'll look at this piece. It's really fine, okay? If I took this and told any one of you on your farm or went to any one of the retailers and said, hey, put this in your product, I'm going to get the California howdy, okay? Because this stuff's going to be real fine. It's going to look like dust. It's going to settle out in my fertilizer spreaders in there. Even though it's pure product, it's not friendly to work with on the fertilizer, dry fertilizer side. So I'm going to get inconsistent spreading and an inconsistent prill. So what we did was we take that powder and we granulize it. Okay, so we take that through a granulation process, It's a product that looks like this, okay? And I'll pass this around. It's the density of urea, the hardness of MAP and DAP. It'll go through in your fertilizer spreading and your fertilizer mix with your N, P, and K, and you'll be able to put this product out there in a dry form. So whether you're dry spreading, going through a spreader, going through a double shot machine, going through strip tilling, whatever it may be, this product will be able to work through in that process. So what I'm going to do is take that, put that in a soil solution here as I pass this one around, and you can look at just the consistency and the piece of that product. So you're going to be able to have that in there. Use rate is broadcast to be 5 pounds per acre. You can talk with Kyle or whoever you're working with on that side of things. You can prorate that down if I'm going in a band, strip tilling, air seeders, things like that. I know everybody talks about increasing yield, gaining more soybeans, things like that. A lot of times our soybeans don't necessarily get fertilizer on them. This would be something you put down in your drill and it's something you could work with. So to back up, humic and fulvic acids, again, help increase CEC, help increase nutrient capacity, and help increase the fertility of your soil. Humic and fulvic acids will start moving and unleashing nutrients in your soil, making it more fertile and being able to have that higher organic matter and pieces like that. Okay, so looking at that aspect of the unlock, increase, reduce, and unleash. So if I just did this, so this one I just dropped in before when I was just sitting over there right now. So you can see how soluble this is, and how quickly it releases, and how quickly you can get that humic and fulvic acid. We talk about humics and fulvics being a marathon, not a sprint. Okay. Our product, because of that chemical reaction, because of the potassium source in it, will release quicker and will break down faster into your soil solution. You can pass this one down here, and you guys can pass this one down as it's doing its thing right now. Okay. You'll see one prill will actually spread across that acre. Okay, one prill will cover that acre foot, and you'll see it move laterally and vertically. Okay. Anybody here have saline issues? Don't lie to me. I've worked in this area with Nutrien for a long time. There's saline around here, okay? Anybody have compaction issues? Okay? Some of you maybe have some low CEC or some lighter type soils on some of the ridges, okay? Those type of this product is going to help you with all of those, having that ability to move through that soil. Basically makes it'll start opening up that soil for water penetration. What it also does with the saline side of things is it has what's called carboxylic acids, or open OH sites. When we get those open OH sites, what they do is they have a positive side, negative side, have open exchange sites. They will hold on to cations and anions in the soil. So what that does is allows us not to have aluminum, magnesium, sodium, iron, all those type of cations hold on to our phosphates, not having things combining like our calcium carbonates. With the compaction side of things, also keeping sodium and chloride apart to keep that saline solution piece open, okay? So not getting those to make that salt, allowing for percolation of water and opening up those areas to make sure that we get some good drainage. We don't get those salty areas, okay? It's a real quick synopsis of us. I appreciate these guys asking me along here to demonstrate this for you and show it to you. I've got some more literature that I can hand out to you. And again, if you have any questions, I'll be around for lunch too. But any questions as of now? Thoughts, concern? That's a super fast 55,000 foot view. Quick piece on it. Okay, thank you very much. Here's the raw material still floating in here. I'll pass this one around. I'll ask for it back, but here's a raw material of a competitor product that's been in there since December 5th. So it shows you its quickness of breaking down and being available for your soil. All right, thank you.
So this is gonna be the meat and the potatoes instead of just talking about a standard fertilizer that you can get from anywhere. The only thing is this would just essentially be a new distributor or potential of marketing your fertilizer. This is gonna be the meat and potatoes where you can actually do that and how you can save more money for your farm. This is gonna be the fertilizer portal. This is the app version. This is where you can take a look at all of your products, your invoices, your billing, statements, release numbers, order history. I just had a guy, he wanted to reference some of his orders he did before I was working with ADM. He went and pulled orders back from 2020. So right from his phone, did it no issues. I just had some tax questions from way back when, but it's supposed to be as easy as it can get. List of all your products, the reason why, so these are screenshots that I put on here. A lot of these will say get a quote because I'm filtered out to a couple locations because of the territory I cover. It's not going to give you a direct price. When you do go into the app itself, so for example, this is red potash. It's pretty hard to see right here, but you can take a look right here. It'll say $3.90 a ton, picked up in St. Paul. I believe that this one is for January, so we're a little bit past that. With this being our marketing side of the fertilizer, we do move our fertilizer basis just like you would for grain. Typically a quote is only good for 24 hours, whereas I know you might go to a co-op. I had the same experience when I was in sales there. You can only sometimes get a price. They'll hold the cards to their chest and say, nope, we don't have potash pricing available yet for September, October, November. You guys are looking to spread some fall P&K. I had a guy the other day, he locked in potash for November, December. So he doesn't have to pick it up, he doesn't have to hold it, it's just stored there until he wants to go either pick it up or have it delivered. That's kind of the beauty of it, is it gives you the ability to market your fertilizer just like you would with your grain. Again, if we do get Castleton online for pulling fertilizer and blends out of there, you can bring some beans over to Zach, pick up fertilizer. It's super simple, you get a release number, punch it into the kiosk once it's all good to go, pull forward, get loaded, and you're out of there. Again, this is the app. The website is going to be the main source that I use. I think it works the easiest. You can also see all of your purchase history, how it was blended, what products you got, stabilizers, urea, micros, the whole deal. So this is kind of the simplicity of the fertilizer side, taking the marketing into your own hands. And this is going to be the other part that you're going to want, is the market update. So I would say probably about the second week of January, India came in and bought a pretty good amount of fertilizer, specifically urea. So anyways, they came in, got a bunch of urea. That kind of caused a market spike because they took away some of the supply that was sitting out there. From that being said, our price was reflective of that. We did go up, I want to say it was about 15 bucks a ton, nothing crazy. For this coming spring right now, it seems like prepay season has been pretty slow. Do you guys all have your fertilizer locked in for spring side dress? So if so, that's great. I hope you got it at a good price. But for right now, with supply looking the way it is for that April-May timeframe, it is looking a little bit tight. As you go into side dress, we are kind of hoping that supply starts to open up, specifically with urea out of CF down in the cities. So we're already working on moving barges north to keep our sheds filled up. So that's a pretty simple one on the nitrogen. UAN still kind of moving up. I don't see a whole lot of downside potential, maybe until side dress if you want to roll the dice on it. For the phosphates, the production of MAP has been a little bit slower, not as great of quality this year, so we're leaning a little bit heavier on DAP. Again, that one is still moving up the river. Those prices have been relatively flat, I would say, over the last 6 months, a little bit up and down here. There was a period, I think it was in July, phosphates were pretty low and they shot up and been sitting pretty stable ever since then. Potash, we're waiting on Brazil to buy. I believe what they need is about 500,000 tons from their historical purchasing amounts that they would have gotten over the last couple of years. They're still waiting idle on that. With a lot of product coming out of Russia for potash, we're waiting to see what happens with tariffs, if there's going to be any sort of increase on tax with that. However, I would say potash has been sitting within about 10 bucks pretty flat for the last 6 months also. Not a lot of movement on that. I checked right now, we are at 370 in St. Paul. Delivered up here, I think we'd be about a 425, so on a full truckload. Sulfur, micros, those have been pretty flat. They did come down over the last 2 years. Everybody knows fertilizer got pretty expensive then, but the sulfur and the micros haven't really moved in general other than that. But yeah, I would say that's about it. It's the same thing. Urea is the same everywhere else. So, is there any questions? Particularly about the app or the forward marketing? Pretty quick summary on it, but fertilizer is the same deal. So, if you have any questions on on-farm storage that we also have for bins or hoop sheds, I got some more information on that too. So that can be all for you to own. We do not lease any of it out. I had some questions on bin leasing, stainless steel storage tanks for liquid. Some people will get the hoop sheds and they'll buy fertilizer in the off season. Right now, I have a guy, he's got $340 urea sitting in his shed that he's waiting to blend off. So that's kind of the market side of taking advantage when the prices are good.
So where are you going to be located in Castleton?
Right at Maple River. Yep, so we've got a wholesale contract with them. So lease agreements and storage. So we send unit trains up there, and that's how we'll kind of keep them filled up. And then we can also take off of some of their inventory space. So that's going to be pendant on when the construction is done there. So nothing completely set in stone, so it's still out in the future, but just an idea. Perfect.
Thank you. Yes, I do. Thank you very much. Last but not least, right? I'm going to talk about markets which have turned back positive. So that's a good thing. I'm going to put mine up here. Okay. Sorry, I'm the last one. The end of the day. But I will have lunch and drinks on me, so hopefully it pays off, because after you listen to markets, it's about what you're going to need. They have not been friendly to us since the beginning of the year. So again, my name is Allison Thompson. I am the new owner of the Money Farm. I purchased the business about a year ago. You probably know Mike Kruger. He started it about 30 some years ago. It was based in Fargo, and I moved it back to Ada. So I'm in the Petrie Insurance Building in town. I have the back office. That's where they stuck me. So you're welcome to come in and talk markets anytime. I'm always happy to chit chat or call or anything. Up days, I could use a few more phone calls. You guys like to call when it's a 20-cent down day and figure out what's going on. And fair enough, we've had plenty of them here since the beginning of the year. So we've definitely had the bear around this year, but maybe the bull's been hibernating. And I think a lot of us wish we were hibernating over the last couple of months. So I'm going to talk a bit about bears and bulls and what's kind of been going on. I'm going to talk about the herd mentality that's out there in outside markets. Obviously, that's had a big effect on our commodity prices over the past couple of years, especially with inflation. I'll also touch on energy markets and diesel fuel prices and how those are looking. And then I'm going to talk about these hibernating numbers from the USDA. They have definitely not been friendly to us either since the beginning of the year. And we'll talk about maybe when some things will change with waking up maybe some bulls and looking forward to 2024. Some things that I've been watching that could definitely change the picture. Some good, some bad. And then I'm going to go over some of the strategizing that we've been doing at the office. I'll look at the technical picture of things, go over our current recommendations where we're at, and probably some of the things that we're looking at doing or recommending for guys that we've been in contact with. So going into the herd mentality, we've been, before the beginning of the year, it was pretty much doom and gloom. Everybody was really worried about inflation coming back. And then come the beginning of the year, we were talking about this soft landing. So obviously that narrative changes very quickly, but it's been very friendly. Inflation has been for commodity prices since it started coming up. We saw it start after COVID, right, because that increased prices. So we saw it a year later where it started to show in the spring of 2021. Russia-Ukraine only added to that fact, and we got higher commodity prices because it is a hedge against inflation. Everybody wants something that's real. low. So we did see a good uptick in commodities, and that's really kept us there. Unfortunately, though, we did actually hit highs when inflation peaked too. Right, July of 2022, that's really when things peaked. And since then, inflation's tapered off. Well, so have our commodity prices. So that's why I always like talking about outside markets a little bit as well. And if you've read our commentary at all, we talk on outside markets some as well, because they do have an impact. So since we've had easing inflation, the big talk is obviously this soft landing, and that's not been supportive for commodities at the moment. But one thing, you may have seen this chart floating around. The blue line is actually inflation going from 1966 to 1982. And from what I've heard, those were pretty bad interest years, and not a very friendly picture. But the blue line is how inflation went. And actually, U.S. inflation now, and I believe it goes back to 13 to our current, and we're following that trend very closely. So it's not one for one, it's not the same interest rate, but if you lay them on top of each other, it does look very familiar. So the concern is that we could see inflation come back one more time before we maybe see a complete easing of inflation for the U.S. economy. So some are thinking that we could see it maybe later this fall, maybe into 2025, into next year, starting to see inflation come back. And I guess I'm in the camp that inflation will come back. Alan is too. This is Alan, sorry. He's in the Iowa office in Marcus. He came up today too, so you can ask. He's the bear, I'm the bull. So if you've read any of our commentary, we have a good relationship. I like to think we even each other out somewhat. But so anyway, I do think that there is a good chance that we do see inflation coming back sometime within the next year. They say inflation isn't political, but we do have the election this year too, and that could definitely just keep things under wraps, or they're going to try to as long as they can, I think, with the election cycle coming up in November. So we did get January inflation data out earlier this month. It did go down slightly from November, so it does fit their narrative, but it was still relatively strong. So it's not really going away. And you can pick and choose what you want to look for. The same as with grains. You can find headlines that kind of match your narrative, and outside markets have been doing that too. Some of these economic reports aren't as supportive of a soft landing as you'd like to think, but that seems to be what they push. So I think there is some things there that we need to be watching. And again, after inflation usually comes recession fears. Typically they follow high interest rates. So if we do see a resurgence, it does open the windows for seeing recessions again too. So all things to watch for. But if we do see inflation come back, I thought this was a very interesting chart. It shows the inflation rate in blue, and the orange price is the price of corn. Now this goes all the way back to 65, so it looks like a really nice uptrend. But you can see where years of inflation come in. We do usually see an uptick in price, and again, it's a hedge against inflation. So we could see inflation coming back being supportive, but it's not 100% true all the time. So it is something that is worth watching. Like we said, outside markets are definitely impacting, and right now the narrative is that stocks are doing well. We're making record highs. Everyone's getting into stocks, but we could see that shift. If inflation comes back, we could see some buying come back into commodities. So historically, it's good for commodities, metals, and grains. So we'll see what happens. So the Fed's obviously the one making the decisions. They're meeting again the end of March 19th and 20th. And going into again, at the end of the year, we were really looking at probably seeing an interest rate cut. But right now, it doesn't seem like we're going to get that. It's probably going to be seeing a pause in March. I have a feeling we're probably going to see a pause in June again. And then if we wait till the next meeting, we're pushing right up against elections. So whether we see one there or not, I'm not exactly sure, but I really wouldn't be surprised if we don't see anything really happen over the next year. We could just be, again, fitting into that higher for longer crowd. So.
I read an article today that they were looking for 6 interest rate cuts, now it's down to 3.
Yeah.
So
Yeah, their chances are getting slimmer. So maybe their time is up for rallying stock market on it. But again, until it actually comes, I mean, then we start trading those kind of headlines. So we'll definitely be watching it. Another thing that I have been watching is the U.S. dollar. That obviously helps our commodities and makes us a little bit more competitive on the export market, because the narrative is always that we have such poor exports, and the dollar has definitely played into that. And this is a long-term chart of the U.S. dollar, and as you can see, we're pretty at a key point. I did mark it on the line. It's kind of hard to see, but it's at 103.7, 103.8, and that's about where we are today. And it is an important level, because if this goes all the way back here, that was the 2020 high even too. So if we were to break below that, I think that the dollar could definitely go lower, which would help our exports. But if we stick out and still hang around here, breaking 100 might be a little bit more difficult. So just something to keep an eye on is obviously the U.S. dollar, and how that keeps us competitive on the global market. Crude oil is trading around $77 a barrel-ish. Yesterday we did make a new high, about 78. But that's kind of been a big point of resistance. We're not seeing the high energy oil prices anymore, but there are concerns definitely in this market. And maybe it's kind of been a dud, especially with the Middle East thing. I think everybody thought energy prices would go to the moon, but it definitely hasn't been the case. There has been some support in the market with the Red Sea issues, and tankers and stuff going through there. They've had to find a workaround. Europe also has had really tight supplies as far as oil goes, and actually the U.S. has been shipping a lot to the EU, and actually topping Saudi Arabia's exports to the EU. So we have found business there too. We also have Russia. They did put in an export ban here that's going to be lasting 6 months. And we do have proof of strong demand here in the U.S. For crude. Refiners are actually delaying their maintenance schedules because they are actually continuing to go. So we are seeing strong demand domestically. And again, it kind of depends. Typically now this time of year we do start seeing the summer driving season come. So usually we do see an uptick in energy prices as well going forward from here. But again, we'll see what happens with inflation and interest rate cuts, because that does play into the narrative of what demand is going to do going forward. So, and another thing that I do want to touch on also is that the SPRs, the big talk last summer was that we drawed those down, to historic levels. We've actually seen the administration buying reserves again to fulfill those, but they've been extremely slow. They're not buying huge amounts like they were taking out. It's a small rebuild, and I think they're doing that to kind of control pricing in a way so it doesn't get out of hand. But they're probably going to continue to buy anywhere between that $70 to $80. If we spike above that, we'll probably see them start to slow up, slower than they are slow now, but it is something to watch as well. But they are starting to rebuild. It's very slow, but we are starting to refill those as well. So here's just a look at crude oil. You can see that we've really kind of spiked over, and now we're starting to work on an uptrend. But again, breaking that $80 seems to be a very difficult point for the market. I did want to touch on distillates. So this would be heating oil. This is a seasonal trend of what heating oil typically does. And again, we use heating oil to hedge your diesel fuel needs. And typically this window, end of February, beginning of March, is typically when we do see buying and hedging those needs. So honestly, looking at chart-wise and where we are, if you haven't bought any of your spring needs, we're probably not looking at a bad spot to start do it, because we did have another little pullback here in heating oil. And here's the heating oil chart too, about 264. So I haven't looked at what actual numbers are locally if you were to get diesel. Has anybody looked at those recently? That's fine. But it's maybe not a bad time to start looking at getting some of those needs met if you know you're going to need some here for this spring. So enough economics. I'm going to get into the, like you said, the meat and potatoes, which are the numbers by the USDA. And typically, everybody hates USDA reports and looking at USDA numbers, but they are what the trade trades. Whether we like it or not, we have to work with what we were given. And what we're given right now are some pretty bearish numbers by the USDA. And the big one that got us here a couple months ago in January, we started the first of the year, was production numbers from last year. They actually increased the corn yield. And from a lot of guys that we've talked to, it really wasn't surprising to us, because a lot of guys had better than expected yields, especially up here. But we saw actually yield increases through a lot of the big growing areas. So what does that mean going forward? Well, we had quite a few weather scares last year, and to still come up with a record yield, 177 plus, it doesn't necessarily bode well if we get more weather issues next year. So I think it's something that the market's going to have to play out and see how it goes. But again, these aren't final numbers. These are the final numbers that they gave us, but they can still make changes to these in future reports too. So USDA is always known for making adjustments that maybe lag it. So we were looking at higher production. They did bless us with some lower harvested acre numbers, but that kind of counted for the yield uptick. And same with soybeans. They came in at 50.6 for last year. So in the end, we did actually get higher ending stocks. Corn remains above 2 billion bushels. Soybeans went to above 3, and wheat actually increased a little bit. And we've kind of seen the USDA continue to play this demand game. I think they want to keep stocks relatively high, and granted, we did have good crops last year, but they have been slow on making adjustments to demand. We know ethanol has been a good grind and has definitely been using a lot of corn. We know crush has been strong. We've had record months upon record months, and they haven't made changes there. And corn exports have actually been running well ahead of pace for the past couple months. So we aren't necessarily lacking the demand. It's there. It's just waiting to see if the USDA is going to make some of these positive adjustments. And they just like to kick the can down the road as long as they can. Heaven forbid they give us a positive, bullish USDA report. But you can only kick the can down the road so long. So some of these things I do think will be coming. I just don't know when the USDA is going to start to account for it. Chances are they'll do it with another big report when we're looking at acres for next year and how big the new stocks are going to be. But some of these things might be hidden in some of those reports. So there is some positive demand aspects that we need to be watching as well. World ending stocks as well. Corn moved lower. Soybeans actually moved higher, and so did wheat. And again, had to do with some outside production issues this past year. Corn with South America, they made some adjustments there. And soybeans, like I said, we actually came in higher, and Brazil's crop as well. So another big part of these hibernating numbers is South America. So I'm going to touch on that a little bit just to give you a picture of what's going on. So their soybean production is normally first, and this is Brazil. So you can see Mato Grosso, that's the big state that we all hear in the news. Very big for their soybean production. So they actually started planting early this year because of their they were dry enough early enough. So guys started getting in the fields early. And after that, it did turn dry for a lot of them. And it caused either guys left them there, or guys replanted, or they waited to plant, or they planted another crop. So there's a wide range of scenarios that played out across a large area of Brazil. So just for comparison of how the U.S. stacks against some of these areas, it's a massive area. So the trade is, and us and anybody has just a very hard time grasping how big of an area that was hit and what everybody did. It's obviously a smorgasbord. So if they did replant, I do have a contact down there, and they actually replanted at the end of November into December. And normally they do a short season bean early on. They don't normally yield that well on their first crop of soybeans, but it did push into March now. So they're looking at the end of March-ish to be harvesting. So you've probably noticed in the markets, we haven't heard a whole lot of yield results or production results. Well, they just hit about 40% harvested on their bean crop. So we'll probably be starting to hear more as March progresses. And they've had dry weather now again, so they've had good progress. So we should be starting to hear more. It's just pushed back a little later. So the big question is, what does that mean for corn too, right? Because it does push that crop, if it is getting planted later, more into their dry season. So March is going to be a key month here because they're going to be planting that crop, a second crop corn, and they're going to be harvesting beans. So the next month or so, we should probably get a decent picture of it and maybe an outlook for weather. But weather forecasts, as you all know, only work 2 weeks out. It's a futures market, but that's as far as they go. So as far as they look for weather is that 2-week window. So we're trading that 2-week forecast, not further out, because there isn't a whole lot of reliability in it. But just to look at where their root zone moisture is, this is last year at this time, and we knew they had decent weather. They had record crops down there. This is the same date, the 20th of February this year. And I circled their big growing regions. Obviously, Argentina looks really good. They've had really good weather, but look at the areas in Brazil. So that tells me that it's dry, obviously, but they are going to need the timely rains to continue, just like us. I mean, that's ultimately what it came down to last year. We had a big drought, and the drought map looked very intimidating, but as long as guys got timely rains, it made the crop. And that's kind of what we're up against here too. Early on in the season, when they were planting their soybeans, they were really facing a lot of different conditions than we did. They not only had it dry, they had triple degree temperatures, and they have red dirt. So my contact down there was telling me, I mean, ground temperatures in the soil were over 120 degrees. I mean, it's not good for a seed. So a lot of replanting happened. And that's what pushed that later. Or they planted cotton, or they planted corn. And if they planted corn or cotton, that cuts away from their second crop corn acres. So there's a lot of different things here that have to hit the market here in the next month in regards to South America. So that could be a wild card to be looking forward to. Here's just a look at some of their weather maps, and you can see it is starting to turn drier in some key areas. But I always put this on here for conversion charts because they're in millimeters. So we have to always convert them to inches. So the map looks really intimidating when you're seeing, some of these blues and greens, but when you account for it, it's only about an inch. So always something to be looking at is the keys for things. So looking at numbers, the USDA has been very slow on making any big adjustments to South America's production numbers. They did lower it this last time for Brazil for soybeans, but not really enough to really excite the market. They're still sitting at that 150, 156, 124 for corn. Argentina, Brazil still at 50, 55 for corn and beans. But a lot of private analysts in South America, and I think this is the maddening part for the market, is that they've been moving down. A lot of them are below 150 now. The Argentina is still hanging out 45 to that 50 area for a lot of private analysts. So it's like, when is the USDA going to do it? The USDA is always slow. They like to see some proof before they make too much of a bullish adjustment to those numbers. Eventually, they'll probably have to move it down, but I think they're waiting for some actual yield results before they get too excited. So I wouldn't be surprised if the March report, they do move it down, but I don't think it's going to be enough to really spark a big move in the market. The market needs that number to fall below 150. That's what they're honestly looking for. But even then, the numbers are still pretty good because it's not only Brazil's production, Argentina's production for beans is up, Paraguay's production for beans looks pretty good, and so does Uruguay. So overall, South America as a whole is looking at a much bigger crop than last year, even with the records in Brazil and Argentina. So we need to be watching that as well. So I think the market likes to play the numbers on what Brazil is doing, but there's more to the picture than necessarily Brazil when it comes to their export programs. But on the flip side, like I said, weather for their second crop corn is going to be pretty huge. And Brazil just recently took over as the world's #1 exporter for corn. So if they do have an issue with their corn production and stuff, we aren't lagging by much. So there is a chance that we could see our export program pick up for corn, and maybe we could get that #1 spot back. But if we need to be bullish numbers and bullish some of these things, we really need a weather issue to pop up. Without a weather issue, I think where current numbers are and ending stocks and everything, it's going to be very difficult to see a really big run in price. So especially given where we're at. So I've been kind of bearish and bullish, but I want to talk about some things that we're watching going into 2024 here as we're going through the year. And we've probably all noticed these dead cat bounces and these fake bounces in the market over the past 2 months. The big thing that we are continuing to watch is the funds. They've made a lot of the news lately because they are near record shorts. But the thing to remember with the funds is they're strictly trend followers. Their only goal is to make money. So they will go in and out of different markets as much as they can to make the most money. So right now they're definitely making money in the grains, and they've been able to do it for 2 months now. And they do watch supply and demand, so don't get me wrong. Because at the end of 2023, we were looking at some forecasts that looked better for South America, right? After we got that fall rally, right around Thanksgiving time, you know, after that, weather changed and prices sunk off. Well, they grabbed onto that. I have a feeling, and that's where we've started to see them continue to sell the market. So any rally has been a selling opportunity. We haven't gotten them to rally more than a day or two, and it hasn't been significant. Actually, it just this week has been the biggest rally of the year in corn. 20 cents, you know? So it's all relative, but eventually they will switch positions. They aren't gonna sell it forever. They're gonna run out of sellers, and that's what we've been kind of watching here in corn recently, is for this selling to dry up. And it looks like it's wanting to form a bottom, wanting to turn, but obviously we need the fund movement. So we get these position reports for the Commitment of Traders, comes out every Friday. Their numbers in that report are from Tuesday. So it is a few days late when we do get it out, but they're real. So that's what the market's given, and that's what we're gonna have to go with. So up till Tuesday this week, I do think that the funds did lighten positions. We had a decent rally here earlier in the week. So maybe we'll see some lightening, but depends how long they're gonna make it. So corn actually did hit a new record short position this last week. We hit 340,000 contracts. Again, those are 5,000 bushel contracts. That's a lot of corn that they're short. And remember, they don't have it. So they only deal in the front month, so March. So they have to make the decision whether they're gonna get out, take their money, or if they're rolling into the next month. So that's why, if you've read our commentary, we've been really talking about these March contracts being a pretty big deal, because when they go off the board and they start going into delivery, it'll kind of give us a true picture of what the funds are actually doing too. So, so as of right now, they do remain short. We hit a record, and it's been steady. I mean, it's been 8 weeks that they've been constant sellers of this market. So to actually see some reprieve would definitely be good. And historically, they don't hold short positions very long. They're very short-lived. Once they hit them or hit records last time in 19, we did get a decent pull-up. So soybeans, we aren't at a record yet, but they've been sellers for 14 consecutive weeks. Really ugly to look at, but they're just shy of the record of 168. We're about 30,000 contracts short of hitting the record. It seems too close not to touch or test at this point, but corn's already made the record. So maybe if corn turns, maybe soybeans will follow. But again, I wouldn't be surprised to see a little bit bounce in the market here before they maybe try and test that record number on the soybean side. But you can see we are historically very short, especially even for this time of year. What we've seen, very counter-seasonal. And wheat too, they're also short there, but a ways off of some records. And spring wheat as well, we're kind of nearing them, but we still have a ways to go. But we have been making some new lows, but we've been holding them here recently for the past couple weeks. I did want to touch on spring wheat, because I know everybody's thinking that's definitely the dog this year as far as prices go. But I did want to compare this chart. I'm sorry, it's hard to see, but it does compare the commercial trade to actually where the funds are. And it's very rare that we see the funds being extremely short while the commercials are extremely long. Now that doesn't necessarily mean anything to the market, because typically the commercials are hedging. So we like to think that they are hedging the crop and they are buying it. But you can see it typically doesn't last that long when we see these big spikes. So the last time we saw this was in that 19 to 20 area on spring wheat. So if we actually look at 2020 spring wheat, that actually, when we hit those lows, and now the green line is there. So we actually hit that earlier in the year around February, and then we started to get a decent rally up. So you can see here we got a little bit of rally, and then they kind of dipped again, and we got a solid rally June higher on the spring wheat. So fund movement does play a lot into our pricing. Another thing I'm watching, just like Daryl said, is this shift from El Nino to La Nina. And again, we've been in El Nino, which is dry, and he does expect it to stick with April, May, which fits mine. Not that I'm a weather person, but I have become one. Markets would be dead if there wasn't some kind of a weather involvement. But we've had a very strong El Nino. After a 3-year La Nina, it definitely kicked in, and we held true to typical El Nino patterns across the globe. But now we're talking about this shifting to La Nina. And typically when La Nina does start to come in from El Nino, it does bring dryness. So they're talking about this neutral shift that we're going to see here early summer, but late summer, early fall is kind of when they're looking at possibly seeing this shift to La Nina, and that could bring dryness in. So the concern that I'm seeing from some other forecasters, and Daryl included, is when that shift is going to happen. So it could be during, the end key reproductive areas, the end of August, September, or we're just going to have another nice fall again. But he doesn't seem to think we're going to have a very nice fall. So then it could be the end of our growing season. But again, I'm not exactly the weatherman, but there are some concerns out there. And with La Nina coming in, we'll see a switch back to what Brazil had last year, which could be more beneficial conditions in some areas, but drier in Argentina and southern Brazil. So, and again, if that's a 2-year cycle, we could see a couple years of that as well. Looking at it for the U.S. side, over here is precipitation. Normally what that means, the top is going to be November through March, and the bottom is November through March in the winter, and then over here is the summertime. So we can see the Corn Belt usually does tend drier here during La Nina years, and they are typically warmer. So we're definitely not out of the woods yet. We're early in the season. There's no weather that the market's trading at this moment. Like I said, South America has kind of turned better. The U.S. crop has yet to be put in the ground. It's hard for me to believe that at some point we aren't going to see some type of a weather rally. It's very rare that we don't see something of a weather rally. And before yesterday, we didn't have snow on the U.S. map either. If I looked back to last week's when I was giving another presentation, there was no snow on this map. So we are starting to see some, but again, it's probably not going to last very long. And it has resulted in some pretty low soil moisture in the root zone, so the first meter of soil. So up here we do look really good. That shouldn't surprise anybody. We got some really good rains actually in December. Good rain in December made a big difference, but there are parts of the Corn Belt that are dry. Allen state of Iowa has been in a decent drought and has drought conditions covering pretty much the whole state as of this point. But again, it's only February. So if El Nino sticks around, and we could see some of these drought conditions expand here going into spring. It just depends what kind of spring weather we get. And then I think that's another thing Daryl pointed to too. Spring weather is more important than the snow on the ground and what conditions are in the middle of winter. So it really comes down to getting those timely rains as we go through the winter months. In Canada too, they're looking at some drier regions as well, and that hit their production regions last year. Winter wheat went into the ground really good for much of the southern U.S. This year, and they've had really good conditions. And it's been warm and dry through some of those areas, but they've gotten timely rains. So we haven't really seen any of the winter wheat lives being taken off the market this year. It's just been a steady downward because they've been just so good. But usually we see some kind of a weather issue rally spring wheat in the wintertime, and we did not this year. So it's not out of the woods yet. Some of the crop is coming out of dormancy. So it definitely leaves it susceptible to some spring weather issues if there are any yet. So that might be another thing to keep an eye on as we get into spring, would be how that crop looks coming out of dormancy. And the USDA will restart their crop condition stuff in April. So we do have a ways to go yet, but from what we've heard, it is still relatively nice crop for winter wheat. So the USDA did have their outlook form in the middle of February, kind of giving an outlook of what they think is going to happen the next year. And it wasn't friendly, big surprise, but it kind of gave the markets a heads up of what to expect on the March 30th report. That's when the USDA kind of really officially announces those numbers and what they're looking like. And, unsurprisingly, they're using trend line yields. So when you're looking at yields, they're looking at, for corn, a 182, soybeans around 52, and wheat around 49. And then obviously looking at high production and also planted acres. So they are looking at lower corn acres than last year, lower soybean acres than last year, and lower wheat acres, but how it's all going to shift out. I think everyone was disappointed in the month of February. We didn't get a crop insurance rally, but they didn't need to buy the acres. If you're using their numbers of what they have right now, there's no incentive to. We're still looking at decently high ending stocks. There was no one that stuck out more than the other to really incentivize any movement from one crop to another. So it was kind of a dud this month. But I would agree that it isn't over with yet. We could see more of a rally going into spring depending on what conditions are. And I know if we do have a nice spring, it's hard to imagine some guys not putting some spring wheat in the ground either. So and actually we are starting to see Minneapolis wheat actually start to compete for some acres. And I'll get into that. But it really doesn't surprise me that they are looking for more corn acres than soybean acres this year. Talking with a lot of clients, and I think overall across the Midwest, everybody had a really good year the last couple years on corn. They had really good yields. They had really good prices to go with that. It made really good money. So to want that again, understandable. But if we have some kind of a weather hiccup, and you cut 20 bushels, 30 bushels off that yield and $1 off that price, it definitely changes the picture a lot. So diversification is always good, and I know this year has definitely brought up some other crops of interest too, especially when we're seeing the volatility in the grains. We also have an election year this year. I've talked to a lot of guys who say, oh, that means prices are going to rally. Well, I actually did some research. I went back to 2008 and looked at what prices did. And they are correct. Prices did rally at some point during the year, not necessarily from first of the year to the end of the year. 2008 was like that. We actually did get a good weather scare in there, but by the end of summer, we actually had the recession hit. 2008 housing crisis, and actually prices did settle lower at the end of the year that year. The other two, 2012, 2016, 2020, we all had prices go up. But why did they go up in those years? We had a weather scare. So it's not necessarily based on an election. They just kind of happened to pair up that we had an election and obviously a big weather scare. So I know some guys are touting averages. Well, on average, over the last 4 election cycles, prices have moved up $1 or $2. I think you need to take 2012 out of there because that was a huge rally and it was based on weather. But typically, yes, we do see some kind of a spike. And honestly, it's because people need to eat. Regardless of what prices do, there's always going to be demand there. The problem is that more and more of these crops that we grow up here are also being grown elsewhere in the world. So we have to compete. And we haven't necessarily been competitive on the global side. Russia continues to export very cheap wheat. And it's uncompetitive with our prices. Quality might not be as great as ours, but I know they've been selling a lot to some poorer countries, and quality isn't their biggest concern. So they've been really taking off a lot of the global market. We did see a little bump last week in prices because there was talk of some tariff sanctions going on with Russia. They failed to include grains. But and I know they want to put all these sanctions on Russia, but the first round didn't work. The second round probably isn't going to do a whole lot to their economy either, because we're not attacking the parts where they're making money. They're making money on oil and grain exports, and we haven't been included. They haven't been included in those. So if that continues, I have a hard time believing that we're not going to see sanctions on some of these grains coming up. And again, going into an election year, like I said, we're sitting at multi-year lows we haven't seen for 2-3 years across the board in grains. So it makes it pretty easy to say that we'll probably see a rally at some point. The U.S. dollar, like I said, very critical point, that 103, will probably make or break that relatively soon, and we'll probably see a sharp jump one way or another. Whether that's higher or lower could definitely be seen. And again, weather is always the volatile factor as we're going forward. So here's a chart, and I'll make sure I include this in my commentary too. The green years are, or the green columns are election years. And then I have corn as the orange, black is corn, blue is soybeans, and the orange is wheat. So you can kind of see what prices did during that time. And I apologize, it is hard to see, but they do normally see a rally at some point during those years. So I was looking at ratios, especially as we're going into planting. It's something that the market's going to start paying attention to here, of what new crop prices are telling us. Unsurprisingly, corn-soybean ratio continues to favor corn. The corn wheat ratio obviously favors corn, so we're planting a lot of corn. But I've been watching this soybean wheat ratio actually, just to compare those two, and it's actually favoring spring wheat if I'm comparing new crop prices as of yesterday's close. So, and I think the market's getting aware that if they're going to have spring wheat acres, there is a need for them. Our ending stocks on wheat are extremely tight. Historically, they've been going down over years and years. They've been sinking here for 6 years. So the market's gotten used to it, of seeing shrinking supplies of wheat, and we haven't seen big demand step in. So if that continues, eventually there's going to come a point where we're going to start seeing some demand pick up, or we're getting too low on our production. And so spring wheat is getting in there and starting to compete a little bit, and hopefully that continues here as we get into spring. Any questions so far before I get into some of our recommendations? Okay. Yeah, you're all ready to be done with this. Okay, so here's a look at the corn chart. I'm really going to finish on a high note showing you charts. But this is front month corn, and this is something that you've probably heard on every news media outlet, is where we're currently trading compared to this big band that we had from 2015 to 2019, and getting back into that trading range. You know, we've had a nice 3-year spike of higher prices, but now we're testing back into getting into some of that old trading range again. So, and we did break $4 on front month corn. We did get to $3.94, and so far that's been holding, but it's very important that we stay above that. So this is just a monthly chart of them, and obviously you can see we've been in a very steep downtrend for quite a few months. Since we peaked in 2022 in that summer, it's been on a steep downtrend, but we hope we find support here, right? We need some demand, we need some kind of supply concern to hold that level together. Otherwise, I did kind of point out some resistance levels. That 450 to that 475 area is kind of what I've been looking at. Now, March soybeans, and again, I know March goes into delivery today, it's the end of the month, but we are going to still see front month on the continuous chart for another 2 weeks. It doesn't go off the board till the 14th, 16th, the 14th. So the action in this chart is still important as far as leading prices from a technical standpoint. So currently, the last 3 days, we've at least been holding support. Now, we did make a new low this morning on soybeans, but they did come back. So it's kind of the same pattern. We've had like 20 plus cent ranges in soybeans over the last 3-4 days now, and we've closed relatively unchanged. So the market's really trying to establish a bottom, but it's been really hard to find a trend after that. You know, are we going to go and see another low spike down, or are we going to start taking a move up? And every rally, like I said, that 20 cents top of that range, it has been being sold. So we need some kind of catalyst to make that change. On the positive side, I did put some key levels of resistance in that are important besides that new low today. What was it, 1130?
Yeah, 11:30 and a half, I think.
Okay, so 1130, important to hold. Getting back up there, 1160 would be the next area of big resistance, followed by that key $12 mark. And I think if we could break above 1240, we do have a gap. That's probably the light at the end of the tunnel, is that the market loves to shoot for targets, whether it's an up or down market. And I think that's what the funds kind of had their eye on, where was that, like for corn, that coming down and testing some of those old lows, like the old lows from last May, June. Those were targets for them to hit the downside. So if we could turn this thing around and get something of a story to turn the market and get the funds back on board being long, these would be our next area for some targets to get it turned around. And that comes into play just around that $13 mark. So if you get busy during planting and markets are taking off, that'd probably be a decent target to start putting something on, because that would be a big target for them to at least get filled. Historically, they do get filled. Wheat market there too has been really trying to establish a long-term bottom, but it's making a slow round, and wheat's always been a little bit slow, but so far we've been holding the lows from last week, and it looks like it's going to want to be making a turn. So currently for old crop sales, what our recommendations are, we are 45% sold on corn, And we are targeting probably making some more sales around that $4.50 to $5 area. And soybeans, 55% sold. I have an average cash price of $13.90, and I'd be targeting $12.50 for making additional sales. And same with wheat. I'm 30% sold there at $9.77, but I'm targeting somewhere around that $7 to make some more sales. So I'm in the same spot as a lot of producers. This summer, we talked about contemplated making additional sales, but we knew guys were kind of in a pickle. We didn't know what we were going to be able to produce with the season that we had. So I did what my producers were doing. I didn't go balls to the walls and do a lot of contracting because it was hard. Puts have been a hard sale for the last couple of years, but I think the last 2 months prove that we need to do some more hedging and protecting prices when they do come. So hindsight's always 20/20, but we got to be looking forward. So I do have some target prices in here of what we can be targeting for, but it's also proved that paper can be a very important tool in your marketing strategy as well. Over the last couple of weeks, we've talked to many guys who were stuck with March contracts, whether it was basis, storage, coming due, and decisions needed to be made. And unfortunately, you're calling in just a couple of days. It doesn't give us a whole lot of options. And rolling with, especially in corn, it's just not feasible to do those things. So if you were forced to make sales over the last couple of weeks, we still like buying calls. A refresher course on just easy on how options work. Calls are, you think markets are going to go up, so you want to capture upside. Puts you buy if you're worried about markets going down. They really just put a floor on for price. So if you did make sales here, I like re-owning calls out to July. That gets you through the end of June is when they expire. So if we do have some kind of a weather rally into this spring, you at least have your upside open, on those bushels. Now, you don't have to re-own everything, but I think that'd be a good starting place. And yesterday I was pricing some out like 480 calls where they were under 10 cents. They were right around 10 cents. So, and that would be like, if you looked at my chart, a good point of resistance as well. So that would be a good starting point for those. And also any on-price bushels. I've had a lot of talk with guys there too. Well, I'm sitting on a lot, I'm storing, I'm losing all this money. And when you're sitting on multi-year lows and charts are looking oversold, and I didn't get into the technicals like Alan does, but it doesn't make sense to really buy at the money puts right now. They're 20, 30 cents. They're very expensive. And if markets do rally from here, they're going to expire worthless. So then you added 20, 30 cents to, off your cash sale. So I would buy cheap disaster puts. If you needed to, if you feel better, it gives you peace of mind, you can sleep at night, I'd buy cheap puts, 10 cents or less. For a disaster, if we do continue to fall down, I would not be buying expensive puts at this time. Another thing that I have been talking to guys about is actually buying courage calls above the market. And like I said, $5, 480s, they're under 10 cents. You could buy now, and then as markets rally, it just gives you some encouragement to make sales on the way up because you're long the calls in the market. So you're already long, because if we get there, they're going to be more expensive. So if we can put some of these on now, at least it gives you the courage to be making those sales when we do see a rally ensue. So a couple of strategies there, and I know I kind of whipped through it kind of fast, but as always, give Alan or I a call. We can definitely talk through how those strategies work. Looking at new crop, December corn, we have actually had a decent turn here. Some of the conditions I watch are slow stochastics, and they are actually starting to make a turn higher. But again, that 460, 470 level would be a point that I'd start watching and maybe making some additional sales. That $4.70 to $5 is probably where I target, at least moving some, reward the market in increments. Don't sell the whole crop yet, but I would definitely start there. I have a feeling there's going to be a lot of sales around $5, but that's a good point. And I don't mind the $5 mark or anything like that. Just pick an odd number, $4.99, $5.01. 497 and a half, something odd, because you have a better chance of getting a fill than a solid round number. So, and there is actually a gap on that December corn chart as well, and that's above $5. So again, another target if we do get a turn to the upside. Soybeans, just like old crop, they have a gap up here too, right around that 1240, 1250 area. So I would be looking at that, but again, we do continue to make new lows. You know, with today at that 11:30 area, we're looking at 11.25, 11.16, and $11. That's a nice fat number. So if we were going to go down, those would probably be the targets there. But 11.60 so far has been resistance over the past couple weeks. So that would be the first point to cross. Hopefully back up above $12, somewhere in there. For Minneapolis wheat, there too we've kind of been stuck, but kind of seeing a consolidation pattern, or at least maybe a rounding bottom since we've been kind of stuck in here. But I'd really like to see us get back above that 6.80 mark to $7, and I'd be probably looking at making some more sales for old crop wheat, or for new crop wheat. So some strategies that I'm looking at, I'm 10% sold for corn for next year. I would target, like I said, around that $5 area for making additional sales. Soybeans, I am 10% sold there too, but I think if we could get back up to that, you know, $11.50, you know, that $12 area would definitely be nice to get some more. I don't have any sales on for spring wheat yet, but again, I'd probably target that $7.50 to $8 level. And again, if you are wanting to protect, again, if you would rather do it on paper than necessarily making sales, last year was a prime example of maybe trying to protect some of those on the board rather than tying up the bushels with a cash contract. We can do that. And actually, I'm probably going to work with North Dakota soy processors, and I work with other elevators and things in the area too. You can sell futures on the board with me, and I'm able to exchange them with your elevator at some point, and we can turn that into cash with them. So you're able to still get the price you locked in with me without having to tie up the bushels necessarily with the elevator. So there are a lot of different options that you can do without necessarily signing your name on the line and tying those bushels to something right off the bat. So it's just another option that's out there. But we've also been using some short dated options if you want to protect new crop prices. So they trade off the new crop month, so November beans, December corn, but they expire earlier. So we've been using July's, for example, if you wanted to do some protection out that far, or if you're making sales here and are worried and you want to buy some short-dated calls back, that isn't a bad thing either. And then I've also started looking out to 2025, especially for corn. We're trading about $4.75. I wouldn't mind pricing some 2025 corn at $5. So that'd be another thing to be looking at too, is looking further out. If anything, the last couple of months taught us we need to be looking further out. So I think everybody kind of got a reality check, myself included, that markets can go to extremes. They always go further than you think they will. And it's definitely a shocker for everybody. So, but that's why we're here. We're trying to give you another avenue that isn't necessarily tied to the cash market. Don't get me wrong, we have plenty of clients that just want recommendations in the cash, and that's totally fine. But I mean, the paper and on the board is definitely another tool to use, and that's kind of what we do. So with that, we'll be around to answer questions and stuff too. We do offer a few different services. We do have a daily newsletter that goes out every day after markets close. Just kind of give you a rundown of what markets did that day. I do have a sign-up book in the back. I'll give you guys a free 30-day trial if you're interested, and you can continue from there if you want. And then we also do a managed bushels program, so that we're working more one-on-one with you as a producer, and what your storage needs are, what your cash stuff kind of looks like, and help you make some timely sales there. And we send out general recommendations as well, so you'll get text services and a phone call, and we'll walk you through it. So we have that service as well. So, and again, we also have the brokerage side where we could just open a trading account as well if that interests you. So feel free to give me a call anytime, or Alan in Iowa. Did you want to add anything?
It's going to be a tough to get rid of this old crop at a decent price. It's going to take some type of a weather rally. I mean, if we don't have any weather rally, we might get another 20, 30 cents on the corn without any weather problems at all. You know, like I've been writing in the report, Allison's been going along with me too, is we're caught. The market knows we're caught. The way the season was last year, everybody thought the crop was dead, how many different times. They didn't sell like they normally did, and the market knows that. And what's really disappointing in this last downdraft of grain, basis actually widened out across the country. So that's telling me that either cash has been moving, or people are taking price later and giving the end user control of the grain,
Mm-hmm.
and that's why they're basic, because they don't need it. You know, so right now we're our worst enemy by selling grain, but we all got grain to move.
Yeah.
So we you know, we're already 23 or 25 cents off our Monday's low.
That's a big move for corn.
Can we get
Yeah.
another 25 cents is the question. So we got some tough decisions to make, and $5 cash corn is probably out of the picture for this part of the country. Even in northwest Iowa, we're only 10 over at our ethanol plant. You know, last year obviously we had good basis, you know, but it's not that way. The only place in the country that is really hurting for corn is northeast Iowa. And if you saw the drought matter, Matt, northeast Iowa did not have a very good crop last year. Most of them guys got paid insurance premiums on their federal crop, and their basis is 25, 30 over right now. So you're just going to have to pick a price at maybe not a price that you want, but you're going to have to readjust your prices and do that.
Mm-hmm.
Reowning paper may or may not work. If you bought calls on Monday, you're in the money on them right now. But I like selling puts. I came from an office that traded a lot of options. Selling puts, you want to sell puts when the market's depressed, and you want to sell calls when the market is sky high.
'Cause-
And right now, buying calls and selling puts in the corn, I think may benefit you to a degree. I don't think you're going to hit a home run unless the weather kicks in gear. You know, obviously everybody's hoping for a weather scare. But, you know, if you're satisfied with your cash prices, I probably wouldn't re-own paper right now. You know, soybeans, we made a new low today, and I still think we're going to go to 1071 front month. So I don't know if it's going to be March or May. I just don't see a good picture unless people in South America or the USDA says the crop is bad down there. But what Allison said, I think they're going to have just as big a crop as they had last year from South America. So
As a whole.
new crop prices, guys, $4.60 corn and $11.30 or 20 beans. You know, I don't know if you guys can make it up here with your cash flows because basis is so much different. But back in northwest Iowa, at 250 bushel corn yield and 25 cents under basis or board price, we can make that work. You know, so that, you know, so we're not going to lose a lot of corn acres in the Midwest, in the heart of the Midwest.
Yeah. The swing acres will be up here,
Yeah.
depending
I
on what
think
kind of spring we
the
get.
northern corn belt, you know, you guys up here will decide what happens with the bean market. If you guys plant a lot of beans, I could see 2 to 3 million more acres above where USDA is at. They're at 3 million more than a year ago. I think it could be, you know,
More.
1.5 to 3 more million acres than that, and that's just coming from the fringe states. You know, so I don't want to sound doom and gloom, but it's all going to be weather, and
We need a catalyst
yeah,
to spark the market. And, you know, when we got, you know, the mindset this year, I'll be honest, is a lot, in the farmers' minds, is a lot like 19. Going into spring, you know, we had very depressed prices. That's the last time we've seen lows like this in the market. Everyone was pretty depressed. But we needed a catalyst to spark that move. You know, COVID hit and all these different things after those lows, we just took off. So, I mean, we could have a black swan or white bison, like Daryl would say, some kind of unforeseen event that could really rally prices. But if we don't see anything, it's going to be very hard to do that or get back to where we were.
on a positive note, you go back 20 years, the January high has been broken 16 out of the last 20 years. So we did it last year. We didn't think we were going to do it last year, but we did it last year. It only lasted for 1 day or 1 week. It was there.
Yeah.
So, and we always do have a spring rally. But at
Typically
what level
do.
Did we start the corn from this level this week and the beans today? Who knows?
Yeah. And it's seasonal too. The John Deere low, the Commodity Classic low is this week. It's not my meeting doing it. It's those things, but that's typically when lows are printed, is sometime here in this week. So
You know, you know, I still farm some, so I'm in the thick of things. We've been kind of lackadaisical with our marketing, because we really didn't have to be good marketers the last couple of years, because the market was there for us. And now we gotta make some tough decisions, and, you know, and we're here for you. I mean, I
Yeah.
love talking on the phone. You know, you may not have an account with us, but
Yeah.
call us up and pick our brain and challenge. I like
Challenges. Yeah.
You know, I like to have the conversation. We may not disagree when we get done on the phone, but at least sometimes I get blinders on and don't hear it all. And sometimes I have to take them blinders off. You know, I just.
Yeah. Yes.
Do you like the short dated July versus just the July calls?
A short dated July trades off of December
Right,
The
I
new
know
crop.
that.
for new crop.
Right,
So it depends what you're wanting to do. If you're doing new crop or if you're doing old crop.
right. But if you wanted to buy them, just in general, wouldn't you want to buy off the December? Because that's the crop that might actually rally if there is weather.
Well, the July short dated is off the December contract.
Right.
It just
It's this-
expires.
Early.
It depends how much you want to pay.
I get it.
Yeah.
What I'm saying
Okay.
is, do you like the?
Do I like new crop outlook or old crop outlook better?
Right.
Ooh.
I would look at protecting new crop corn. with this.
That's, yeah.
460 December corn is only 40 cents off of this year's high, you know. I would not sell cash corn.
Not yet, no.
I don't know if I sold a straight out futures position on December corn for 460, then I would go out to the July short dated and buy a 480 call, 490 call, just in case we do get into the weather market.
Yeah, then you can at least help offset the
I
margin.
would not sell any cash corn unless you got one hell of a sale.
Yeah, but if you ended up having to make 4 sales here in the last couple weeks, then I would use the July options, you know, to do some calls.
What's your all's opinion on the carries out there from Dees to March, Dees to May right now? What's the thought on, you know, selling a March futures or a May futures and then re-owning a short-dated Dees or a September call?
You're getting complicated, but I'm not a spread trader. I don't normally trade the spreads, but we have been watching them, and they've told some interesting stories here. If you've noticed spring wheat, if any of you had March wheat, I mean the roll was like 4 cents, and it was darn near even. Chicago's actually inverted. We've had inverted markets for the past few years, which is good. Just means there's demand there. So somewhere there's a story in wheat. Corn and, well, soybeans is actually not that bad either as far as spreads go. So there might be some demand starting there. Something's telling us they want the beans up front versus further away. And corn's wider. So eventually it'll hit what's going on. Some of that is speculated to be fund movement as well. If they were rolling or doing something like that, maybe even it out a little bit. But I guess the truth will be down the road.
I mean, you could sell the spread and buy a call. I mean, it's just what strike price to call do you buy? How much do you risk, you know? And right now, this Monday I bought 430 July calls and sold, I can't remember what put I sold, but I did it for 12 cents. But I got the risk of the market keep going down.
Yeah,
But I'll exit the put if we make a new low in the corn. I'm not gonna margin the put.
yeah. But if you've never worked with options and it interests you, give us a call. I mean, we can definitely walk you through how they work. Sometimes just doing one or two,
They're
you
very-
can,
Yeah, they're very, very confusing, and I always tell people, try one with us and watch it. That way you can learn, you know, I can teach you, or you can learn together, as I say.
yeah, on how
They're
they
a
work.
tool, And I used to, as a farmer, before I became a broker, I've been a broker 14 years, and as a farmer, I hated them because, yeah, they did expire worthless. They always did, seem like.
Yeah, but
We
they're,
bought some, you know, some people from this office, we bought some nice 490 March puts for 22 cents, and we liquidated them last Friday for 77. So they made 50 cents. You know, so they do work, but you know, there's timing, the cost of them.
You have to weigh your risk.
So,
But we'll be around. So they have lunch ready in the back, so you can enjoy some lunch. I have the bar, so if you're like me, you could use a drink now. Beer sounds all right. Made it through today.